Welcome to Cultivated Live for Tuesday, August 13th. I almost forgot the date there. My name is Jay Rosenthal. I'm the co-founder of Cultivated Media, the host of this program, which is called Cultivated Live. And since we launched way back when in November 2023, our goal at Cultivated has been to be cannabis industry first, providing you with the most important, insightful, useful, and timely information. We do that in a couple of different ways. One, through our daily newsletter, which is called Cultivated Daily. And we do that through this daily live stream, which is called Cultivated Live. So please, we'd love for you to follow us on LinkedIn, where we stream, on YouTube, where we stream, and get our newsletter in your inbox every morning, which you can find at cultivated.news. Today, I am pleased to welcome on Chris Reece. He is the founder, chairman, CEO, and probably several other titles at MJ REIT. Chris, welcome.
Thank you, Jay. It's great to be here. I appreciate it. And I would echo the same sentiment. Your email that comes out in the morning is kind of the first go-to that I hit the day with.
And I appreciate you saying that. And truth be told, I'll even my sort of origin story. I was doing something like this almost 20 years ago in California. I was in public affairs, and one of my clients wanted all the daily news in a little bite size before they woke up. I was like, well, that's going to be really hard. Some of these papers don't even have internet, but it was like, I see the value in that, and I'm glad you do too. And we try to make it a really comprehensive, but also curated and short read. And so those watch this that don't get the newsletter, listen to Chris. He knows what he's talking about.
Subscribe.
Yes, please subscribe at cultivated.news. You can also find us on LinkedIn and all the other channels. Chris, thank you for being here. We're glad you're here. Thank you for being a partner as well. Give us a little bit of the origin story of MJ REIT. Then we're going to dive into we'll dive into more. But give us the origin story of MJ REIT and weave in your background too.
Sure, absolutely. And thanks again for having me today. Just a quick background on me specifically. So I've been in asset management for coming up on 3 decades now. So I've been doing this a long time. Half of that time was spent on the public side, and the last kind of 14, 15 years on the private market side. And what I always found interesting with the private market side is, it's very easy to go out and go to a Vanguard or elsewhere and gain exposure for your investment portfolio by buying a public stock. But it gets a little more challenging when you begin to look at the private markets. But I think also the private markets offer a unique opportunity for investors to diversify their portfolio, create a non-correlated return stream, and a whole host of other benefits. And so I started looking at a couple of different industries about 3 years ago as I wrapped up my time at my prior firm. And I wanted to start a strategy in a market that certainly had tremendous amount of growth, and that was cannabis. And then secondly, I wanted to identify a market that was struggling getting the financial resources to fund that growth. And so I kept coming back to the cannabis market as one that offered, from an investment standpoint, the opportunity to deploy capital, from a growth standpoint, the opportunity to help businesses and around the country continue to grow in a very vital part of the U.S. economy. Importantly, what we finance, though, just to be very clear, we're not lending directly to operators, but rather simply financing a piece of real estate where you, the owner of that building, can't go to Wells Fargo or JP Morgan or any of the other banks to obtain financing. So we step in and we provide either a senior mortgage or a sale-leaseback transaction, giving you, the owner of that building, the financial ability to grow your business, maybe acquire additional assets elsewhere. And really, it's been great to be a part of a growing industry over the last 3 years. And so we launched it in the middle of 2022, and we're continuing just to finance transactions and properties all over the states.
Yeah, and it is one of those things, as you described, sort of the cannabis industry that 3 years ago and even now has these unique constraints, but is also growing by leaps and bounds and in new markets. Like, did you think way back then, all the 3 years ago, that we would be further along in some of these things, banking, thinking about some of the regulatory challenges, which opened up the opportunity for you? But like, did you think it would be further along in some of those things? The boxes have been checked to normalize things, or was this about where you thought we'd be 3 years hence?
I actually thought we would be a little bit further along than where we are today, given the kind of momentum in the marketplace. But there's still some hurdles that we face, and you hit the financing aspect with safer banking kind of finding its way multiple times and never actually getting some success. but that will help across the board, different operators to secure financing. And so while we look at it as, we're cheering for the success of the overall industry. That helps us out. It helps most of America, where I think today, when like 80% of the population of the U.S. live in a county that has at least one dispensary. I think the overwhelming support on a national basis is to continue to see less regulation and more access to cannabis products around the states. And so I think originally when I launched, I thought we would be a little bit further along. I think we'll continue to see this, and even it's no surprise with what's going on in the political scene. But I think on both sides, I think there's generally a favorable mindset, at least maybe not favorable, but not more restrictive. And I think that's the important point as we go forward.
And how does that play into, I guess, people who invest with you, but also the people with whom you're financing? Like, is it more normalized from that perspective, where 3 years ago it might have been sort of a taboo subject about investing in this sector? Has like that died down? And I guess the receptivity to people sort of working with MJ REIT on the sort of investment side, like how does that played out over the same time horizon? Is there more appetite for it? Are you getting more inquiries like than you did 3 years ago? Is it less taboo? Like the normalization of this type of investment, or the investors that you're talking to, has that changed a bit over that same horizon?
It's an interesting question. So I think ultimately where we're headed is it's becoming more socially integrated, right? Yeah. However, there are still some hurdles and challenges that we face. So you think about the stigma that's around just cannabis as just the overall segment of the market. And then also understanding that a lot of our investors may find it very appealing and want to include it in their investment portfolio, but they work at a public bank, which has very strict compliance. And so the compliance says, no, we're not going to allow you to invest in this, even though, from a financing standpoint, we're not lending to operators. So we're technically one step removed from touching the plant. So we just finance a piece of commercial real estate on either the industrial or retail side. But I think from an investor standpoint, there's more appetite today than we saw 2 or 3 years ago. And I think that ultimately will continue as we go forward over the next 12 months, 2 years, 3 years down the road. And I believe that as we continue, at least at MJ REIT, we're building a track record, and that track record really is I don't want to say a stamp of approval, but it's a report card, right? How have we done through different markets? How did we do in 2023, where you saw a spike in interest rates? And then how will the portfolio continue to perform should the Fed cut, which I think the general market consensus is for a rate reduction in September when they next meet. So it's really working through that mindset of continuing to educate the marketplace, and you're a big part of this as well. Understanding the benefits that cannabis and its respective components of the sector can have, not only on the population, but then look at the state growth. I mean, more and more states are looking to come online, and I live in the great state of Pennsylvania in the Commonwealth. And here it's just medical, right? We just have medical cannabis, but from Philadelphia, you can hop over the bridge to New Jersey and, consume or buy what you want on an adult use basis. And New Jersey collects those taxes. Governor Shapiro doesn't like that, right? Yeah. I mean, he wants his state to collect it. And if you look at the surrounding states, more and more of those states are coming on, especially in Pennsylvania. Florida, as you know, is a hot topic. The Dakotas are gearing up for November as well. So there's a lot of states, a lot of movement. I think as we continue to go down this path, you'll see and continue to see wider acceptance.
Yeah. And well, I'm calling it the Pennsylvania squeeze now, because it is certainly on now that Ohio last week sales started there. It becomes very challenging for a state like Pennsylvania. And I would say New Hampshire is the other one in that sort of in that boat right now, where you just get squeezed, right? And we had a assembly member or House member in New Hampshire say there's a conga line every day of New Hampshire people buying cannabis in other states. Like, that's how she described it. They know it. The next step is to actually do something about it, but the do something about it gets harder, easier and easier, and less friction, I think, the more tax money that flows out of your state. Because even when you begin to do when you begin to roll out a program, there's so many hurdles, as we were just talking earlier about the New York market, where the intention is one thing and the actual put into practice can be something very different. And
you might think it will take 3 or 6 or a year to roll out the program, but it actually takes longer than that because of all these other little bumps along the way.
Yeah.
There's an old saying that in what did this say? In theory, there's no difference between theory and practice, but in practice there is.
Right. Well, that's good. I'm gonna write that down and use it frequently. I want to sort of ask, like you talked about Pennsylvania, certainly.
Mm-hmm.
Florida, there's a ballot measure. I think both Dakotas, there's a ballot. But, well, they've all gone to the ballot. The Dakotas have gone to the ballot several times. Both of them. Like when a market like that takes the next step, say Florida legalizes by ballot in November, like does that open up new opportunities for you from MJ REIT from an investment perspective or an investor perspective? Like how do you look at a market like that is in real time on the ballot? Like are there opportunities that would exist for you the second week of November that don't in the first week of November in this scenario?
Yeah. Yes. And so given the fact that take Florida, for example, and Florida is a somewhat unique market because it's very limited in the licenses that are out there. Yeah. I think there are 22 licenses currently. So it's very, very constrictive. But when you move to or from medical to full adult use, you do see a spike in not only the number of usage, but also the demand overall, which then translates to additional sales, which translates into additional tax revenue for the state. All of those properties need to be financed, whether it's on the cultivation side, the processing, the retail and dispensary side. And in order to do that, you need financing. And again, kind of going back to the safe banking, there's just not financing out there available. And so we're filling a vital role in the marketplace to finance different transactions to continue the growth. Ohio, as you mentioned, it was a good case study. So we financed a number of properties in late 2022. And at the time, it was just medically legal. Mm-hmm. And then fast forward November of last year, they voted to go adult use. And then, as you pointed out last week, sales began in those stores. What we saw was a tremendous spike in the value of cannabis-related real estate. And that allowed the owner of those properties really to benefit from the financing that we were able to provide. Because without that financing, they would not have been able to potentially secure those properties and get the company ready for the build out.
Yeah, that is one of the things that is interesting in cannabis. Interesting. It may be in other scenarios too, but because of the highly restrictive nature, because of the banking, which we talked about, but also the real estate becomes a huge challenge. Sure. Because what a state will do and the people industry, and like the regulations are written so strictly that it can't be within 150 yards of X or half a mile of Y. And then cities on top of that have their own sort of zoning issues that they wanted here and not here. And then it puts this squeeze on sort of the price of real estate, obviously, which puts the need to actually, if you really want to open, you got to finance that. Like, have you seen scenarios where people have done it? This is sort of a more policy question, like, and I think Ohio is actually a good example because they allowed any medical dispensary to say, oh, you can actually be dual licensed. But like, how does that squeeze on real estate like affect operators like in real time? Like when they voted in Ohio, my guess is the value of the property that those operators were currently on went through the roof because they were already there.
Yeah, absolutely. And one of the unique differentiating factors with what we do in the marketplace and maybe some other financiers in the cannabis space is I mentioned already that we focus solely on the real estate value, but importantly, good for our investors, probably a little bit restrictive on the borrowers. That we don't give the borrower credit for the bump in cannabis valuations. And so usually, the way it happens is you and I get together, we buy a building for $2 million. We put $4 or $5 million into that to outfit it with HVAC, security, lighting, irrigation, etc. And now in our mind, that building's worth, $5, $6, $7 million. But for the fund and every transaction, we assume as a base case scenario that cannabis goes away and we need to find another non-cannabis tenant. And, for our investors, that means we're very conservative on the value that we assign those properties. And in this example, we may come in and only value that building at $2.5, maybe $3 million. And while that's somewhat that valuation might be quite different than you as the owner of that building think the building is worth, we're gonna first and foremost go after deals that not only generate attractive risk-adjusted returns for our investors, but we're mainly debt managers, and certainly the biggest thing that we focus on is how not to lose money for our investors. that's goal number 1, 2, and 3, and then 4 and 5 is, we'll continue to expand out. But it's really focusing on coming up with that attractive valuation that allows you, the borrower, the capital, to do what you need. And then from the lender standpoint, we want to ensure that we have downside protection for our investors.
Yeah. And that, let me ask you a question, because you've been in this a long time and understand the cannabis market, but also other parts of the sector too. Like, is this exists in sort of its fullest form in other parts of the economy outside of cannabis too? But outside of cannabis, as going back to the first thing, like, there's banks and other financial institutions out there to sort of fill that gap. How robust is it in other people who don't work in cannabis, that work in other parts of the sector? Like, how robust is this type of financing in other parts of the sector? Is it like easy to come by and like every bank will do it? Or, like, I'm just trying to gauge like cannabis versus other parts of the economy.
Sure. And so just about, well, every bank in the marketplace has a lending platform. That's how banks make their money.
Yeah.
So
that I know. Yeah.
One of the aspects, and there are some others as well, but when you specifically look at banks dealing with cannabis, they will now, there's, last I checked, 600 or 700 different financial institutions that will accept deposits from operators, but still none of those banks are looking to actually make loans to cannabis. And that's really gets to the whole Bank Secrecy Act. It gets to the fact that it's illegal on the federal level. And so you have those FDIC insured banks that are somewhat staying away from the space up until they can get assurance that they'll be sheltered or protected from liability and prosecution at the federal level. So they're very slow. So even if you roll a scenario forward where we have an expanded banking policy, I still think some of the larger banks like JP Morgan, Wells Fargo, even a firm like Goldman Sachs may have some reluctance to get into the space, because if you think about their clientele, I mean, they have a lot of very large international clients that may have a different stance on cannabis overall. And why jeopardize a $2 or $3 billion investment from a client to finance a couple $100 million in cannabis? So eventually that will change, but I think even when we have a softening of the regulations, allowing for more participants, it's going to take a little bit of time for those larger institutions to get involved in any meaningful way. And that's really our value proposition of filling that void in the market to help these companies secure financing so they can continue to grow and provide a vital service to the U.S. economy.
Yeah, and that void does, and this we've seen in the Canadian market too. That void doesn't go away the day legalization happens. It takes a good deal of time, and maybe I don't know forever, but a good deal of time to normalize all those things. Even in Canada with deposits, not every bank takes like it becomes, while the opportunity is there and they're allowed to, it doesn't mean it actually happens. And I think that's sort of the positioning that I try to strike with folks that have seen Canada, like, oh, you're so lucky it's federally legalized. Yes, but also things don't change overnight.
Right. Yeah. And also, you remember, I mean, there was a point in time, and I think most of this has gone away. But as an operator, if you wanted to deposit your revenue inside of a bank, they would charge you a negative interest rate, meaning that you had to actually pay. And you didn't earn any money on your money. And not only that, you had to pay to keep your money in the bank. So I think that will ultimately continue to change over time as the industry matures, and to our earlier point, as it becomes more widely accepted. And then as soon as we get some regulatory relief, I think that will continue to expedite the sector overall.
Well, Chris, I'm going to ask you a crystal ball the next. You can choose the time horizon, but you want a crystal ball. I don't even know, like the next year, 2 years, because as you sort of alluded to, there's always this, well, rescheduling is, if not upon us, something will happen very short order, likely before the election, I think, with rescheduling. I think a next step is banking reform on some level, or at least acknowledgement that banking reform is needed on the federal level. There'll be a new administration, 2025, no matter who wins the election. And potentially Florida, both Dakotas, Ohio will be legal. Pennsylvania, I think, is next. New Hampshire is going to be considered. Like, what do you, over the next 1, 2, 3, 4 years, like, how far do you think this industry will be vis-a-vis the work that you do versus the previous 3 since you've been in it?
Yeah, I think as we continue to see the market mature, and to hit on a lot of the different items that you just touched on, as we continue to see rescheduling, not necessarily descheduling, but rescheduling, banking reform. I think the market 3 to 5 years from today will continue to be much different than it was 3 to 5 years from today, right? So we'll continue to see this migration over time, and that will ultimately lead to a higher demand of capital. And to our point that we just made with states rolling out new programs, even on the federal level, and if and when safe banking passes, you're going to continue to see a slow rollout of that. So I think it's going to take some time. And for us, we're looking 3, 5 years out, 7 years out, and we still see a very attractive marketplace overall. But importantly, from a fund standpoint, we don't know, we don't have the crystal ball, and we don't know where the market's going to be in 10 years. And so when we underwrite financing for on the real estate, we keep it very short in nature. So think of 2 to 4 years in maturity on the paper. So we don't have a crystal ball. We are debt managers. We don't want to lose our own money, let alone our investors' money. So we're very focused on downside protection. And in doing so, we're going to continue to deploy capital in a judicious manner into the marketplace. And I do think it'll be a much different market 3 to 5 years from today.
Yeah, I think you are right. Both, well, larger in some places, potentially smaller in others, and maybe more regulatory relief, sort of, as you said. Like, I think there's a direction that this is going. It's the time horizon that is the challenge to sort of figure out. But things are moving and moving. Like, whether it's quickly or slowly, they're actually on the move. We haven't seen stasis for a long time, whereas we used to see the sort of Western states as sort of that was the industry. Now it's sort of a nationwide industry, international industry. Chris, I put up how to find more about you and the team here on the screen. This will be the first time we have you on, but definitely not the last. We love your perspective, love the insight, and love getting people in touch with you and learning more about MJ REIT. But I also want to wrap this up, get people on their busy Tuesdays. So thank you, Chris, for being here today. We'll have you back on in short order, but thanks for being here.
Thanks, Jay. I appreciate it.
You got it. And that is it for today's Cultivated Live. We will be back tomorrow on Cultivated Live, on LinkedIn, on YouTube. Follow us, subscribe to us, get in touch with MJ REIT if you want to know more information. That is Cultivated Live for today. Everybody, if you are near a dispensary in one of those counties that Chris pointed out, go buy cannabis at your local dispensary, and we will see everybody tomorrow.